right, welcome back to the Midweek Update. My name is Patrick Dunawilla. I'm the editor of the Chart Report. Steve Strauss is going to be taking a break this week, but he'll be joining us again next week. So today, instead, I brought on Ian Cully of All Star Charts. Ian's kind of my go-to for all things commodity related. So what a better time to have someone on to talk about commodities. Ian, how are you today?
Excellent. Thanks for having me, Pat.
Oh, of course. But I mean, what a day, right? We saw some pretty massive reversals, whether you're talking about stocks or commodities.
Lots of long wicks out there. Lots
of long wicks in both directions, right?
That's right.
So before we talk about commodities, let's just look at stocks real quick. First, we have the S&P 500 here. We've been talking a little bit about this head and shoulders top. It seems like everybody out there sees it. And the other day in our chart of the day, we were talking about how sometimes when a pattern becomes so obvious, it's kind of prone to failure. You know, if it's obvious, it's obviously wrong, to quote Joe Granville there. But we saw some really positive action today, massive reversal, like I said. And the key for the major indices right now is really those December lows, whether you're talking about the Dow, NASDAQ, S&P, or Russell. It's really about those January lows. If we can get back above them in the near term, then there's a good likelihood of some sort of relief rally. Below that, you know, we're kind of in risk off mode, and you got to be careful. For the Russell's been kind of the most beaten up. As of going into today, it was in bear market territory, down 20%, if you want to call it that. But, you know, like the others, it reversed hard, and we saw that long wick, like Ian was saying. And RSI is diverging. It didn't even get oversold on that last lower low there. So, and it's one of the only major indices to have held those January lows. So as long as that one's above the January lows, you know, we look at small caps as often leading the broader market higher or lower. So if they can get going here, then that would be another really positive sign. What do you think of that, Ian? How did I do?
I agree 100%. I think it's really good sign to see the Russell bounce the way that it did today, and all the indices for that matter.
Yeah. And it wasn't just Russell. I mean, you look at something like ARK and the massive reversal you saw in something that had been beaten down to pulp. You know, you could look at that as a trash rally, but it's also, I think, you know, it needed to happen. That thing needed to stop going down in order for the broader market to stop bleeding as well.
100%.
Yeah. So anyway, let's talk about commodities, Ian. So DBC, that's kind of our commodity benchmark ETF that we use for commodities. It's up about 15% almost, while the S&P 500 is down 10%. So stocks are in a correction. Commodities are still flying. They've been outperforming for over a year now. But at this point, Ian, you know, would you be putting new money to work? If you had to put money to work right now, would you be picking stocks or commodities here? Because it almost feels like you'd be chasing commodities here at this point. Stocks have been beaten down. Is it time for that relationship to kind of at least mean revert?
I think we definitely could be at that point. And when you look at stocks relative to commodities, that ratio is retesting the 2018 highs. Coming back and potentially finding support at former resistance. So logical level for stocks to dig in and start to outperform commodities. So,
yeah, and I mean, that's not to say that the bull market in commodities is over, right? I mean, like you said, it's just been on a tear. I mean, we were talking earlier. Here's a chart of the CRB index. It's been up 10. It's working on its 10th straight week higher. A 10-week winning streak like that, we haven't seen that since 2011. And what happened in 2011, Ian?
I mean, yeah, commodities peaked in 2011.
Yeah. So,
major topic.
What do you think here? Do you think they have to consolidate? Do you think they have to sell off? You mentioned a Fibonacci level earlier too. Why don't you speak to that?
Right. So the CRB index is running into a level of former support, and a key Fibonacci level of the 61.8% retracement level, around 268.39. So it's a logical level for commodities to run into resistance. Wait and see how things, pan out in the coming weeks. But they've been on a tear, and like you show 10 weeks in a row, 10 up weeks in a row. I mean, it's just a great place for commodities we've seen it so many times before. Just take a breather and digest the recent gains. I mean, those gains have been monster gains.
Yeah.
So yeah, I mean, this is just, it would make sense for commodities to pause.
Yeah, after sprinting higher, they at least need a little breather here, right? That's kind of your point.
Absolutely. But I mean, I wouldn't go so, I'm sorry, I wouldn't go so far as to say it's a major top. But definitely a place to take a breather.
I think, digestion. I think that's the word right there. When we look at something like the CRB index, so much of that is crude oil. I think that's the largest weighted commodity in there. And crude oil, big day for crude oil, right? It hit $100 a barrel for the first time in something like 7-8 years. It's been a while since we've seen crude at 100 a barrel. It wasn't there very long. It just really tagged it and was there for about 10-15 minutes and then sold off like 7-8%. I think it ended somewhere around 92 or 93 a barrel. But what's kind of your outlook on that? That's one of those that like so many commodities that we saw has that long wick. Was that it? Was that all she wrote? $100 a barrel for 10 minutes and then that's it?
In the near term? Yeah, I think so. I think
near term and long term. What do you think?
Long term, I mean, there's no signs out there. There's no information or data coming in to suggest that the commodity super cycle thesis that we have isn't valid. This is just a couple days. We have to think about price action. One day of price action, isn't going to completely invalidate the bull market that we've seen over the past year and a half in commodities.
Right, and keep in mind this went from negative to $100 a barrel relatively quickly in like 2 years for something like that. So to think that it's just going to reverse on a dime and that's it. That's I understand how this is the long-term train still moving. You're saying absolutely. But shorter term, what are some of the levels for crude that you are watching?
Well, watching the November pivot highs from last year, around 85.50 for potential support. We'll just have to wait and see if it holds. Now, if we get back below there, 76 has been our level. We'll just have to see.
So, within commodities, you mentioned, there needs to be some digestion there, but, gun to your head, if you had to put new money to work within the commodity space, which area within commodities do you like the most? Like between the soft agricultural commodities, precious metals, energy related commodities, what do you think is kind of offering the best risk and reward here?
Well, I really like the grains.
The grains.
But the reality when I'm talking corn, soybean oil, and especially wheat. I mean, wheat was limit up today.
Okay. Yeah.
But the reality is, if we're not long those contracts or agriculture yet, I mean, train's left the station already, and it's going to be really hard to jump on that train. It's speeding away right now.
Yeah, so, you're saying at this point the trade's kind of already been working. It might be a little difficult to start a new position at that point.
Yeah, it's just hard to define risk, reasonable risk. On the other hand, believe it or not, precious metals are offering some opportunities. Even with today's candles, even with the crazy wild price action that we had today in gold and silver and platinum, I think there's some developing opportunities in the precious metal space.
Interesting. And so like on this chart of gold here, you see all the way to the right, that massive reversal candle that Ian's talking about there. You're kind of watching those. What level is that?
That coincides with the 2011 highs around 1920.
Okay, so for something like gold, if it's above that, you like it?
Exactly. That's the line in the sand.
And you think, what do you start looking for opportunities within miners and stuff if it can get above there?
Yes, absolutely.
And it's amazing. It was there earlier today. It went all the way up to 1975 and then also reversed. That's just crazy action.
I know. And I usually run in the opposite direction when I see wicks like this. But I mean, gold's not ready yet. this isn't a trade that we want to put on, tomorrow. But it's developing, and maybe it's something that might develop, into an actionable trade here in the next few weeks. We'll just have to wait and see.
I like that. So 1920 though, that's your line in the sand for gold.
Line in the sand for gold. In terms of silver and platinum, focusing on the November pivot highs from last year.
Okay.
I think we can get long silver above 25.50. Again, we were above 25.50 earlier today for a little bit. It goes all the way down here 24. And for platinum, it's around 111.10. So a decisive close, and that's the key. Decisive closes above these levels.
Right.
Are very important.
We didn't get that today, and
no.
If anything, that's kind of maybe a warning sign, right? Those massive reversal candles.
Yeah.
So when we were talking earlier, you mentioned we can't talk about commodities without talking about wheat right now. You really like wheat. Why don't you go ahead and break us down through that chart?
Just big base in wheat, and I just the bigger the base, the higher in space. The higher in space, and I was really excited about these wheat charts. Here we have the Chicago wheat futures continuation chart.
Now, is that the most popular one, Chicago wheat?
It is. There's also KC wheat and Minneapolis wheat as well. They're both breaking out.
Does this chart, real quick, does this chart include today's action? Because like you said, it was locked limit up.
It was locked limit up, and this chart does not include today's action.
Okay, so where do we settle today?
Right near those former 2012 highs.
Oh, okay. So this was a fresh breakout. It's in the works.
Yes. So what's interesting is that we saw a lot of long upper shadows in a number of the grain contracts today. Corn, soybean oil. But with the wheat contracts, they were all locked limit up. So it'll be really interesting to see how things play out when the market reopens this evening.
Right. Yeah, by the time this video is out, I mean, we'll probably know, right?
Yeah.
But so just lay out real quick the levels you're watching on the wheat futures contract.
Wheat futures, that 94, 947, $9, $9.50.
Now, most people watching this at home, Ian, they might not have access to a futures account. How would your average retailer at home play this? Is there an ETF or something?
Yeah, absolutely. You could trade the wheat ETF, WEAT.
WEAT. Wow. Okay.
Yeah. Making it easy for us.
Is it decently liquid?
It is. Yeah.
Oh, okay. Yeah. I know some of those agricultural commodities can be a little thinly traded. So, but this one, it's decent. Yeah,
this one's decent. Absolutely.
All right. So break it down for us. What do you like?
So as long as we're above 840, 850, I like it long.
Awesome. 840, 850.
That's our line in the sand.
Wheat. Awesome. Well, hey, Ian, thank you so much for coming on this crazy day and sharing your perspective on commodities. We really appreciate it. And we'll definitely have you back soon.
I appreciate it, Pat. Thanks for having me.
Awesome. Have a good night. Thank you for watching. Be sure to join us next week and make sure you go ahead and click like and subscribe if you enjoyed the video. Thanks.